we were just talking to Dheeraj about one space, which is the housing finance space, which has been doing really well. So let's look at that. PNB Housing Finance is on our radar. The company in their conference call recently said that they maintain their FY24 guidance for spreads and the net interest margin, while for credit costs, they are guiding for 0.6% for FY24 and 0.4% from the next fiscal onwards. Girish, Kousgi, the MD and CEO of PNB Housing Finance, joins us right here in the studio to discuss more on their business momentum. Mr. Kousgi, good morning, and thank you for being here, taking the time out and visiting our studios. Appreciate it. I want to understand, because the space is growing really fast, right? The affordable housing segment. And we were just talking to Kolte Patil. They were saying that demand across the board, across geographies, is looking very good. Are you confident of maintaining the growth? I mean, earlier you had said that AUM growth will be about 17-18% year on year. For FY24, are you confident of doing that? And what are the early signs for FY25? What kind of reasonable growth would you be looking at?
Yeah, good morning. Thanks for having me here. So if you look at PNB Housing a year back, we used to show growth of, it was either flattish or it was negative. So from that stage, we have moved to a book growth on retail of about 12.5% in first half on a YOY. Now, I had guided a growth of about around 17%, right? I think we should see it more directionally. PNB as a company, we are in a transformational journey, right? And we all know what has happened in last 1 year, right? So there are three reasons why I feel that this industry will grow. Whether PNB will do 17, 17.5, 16.5 or 16, I think it's not a real matter of, I think it's not a real big concern, but as directionally, this industry is doing well.
Yeah.
Industry is doing well. There are three reasons. One, there is huge demand on the prime side, on affordable side. Number two, there is huge shortage in the housing units. Number three, there is huge support and push from government. And that's going to be a X factor in next 2-3 years time. So all these three things put together, this industry has to grow.
Can you elaborate a little bit on what is the push from the government that you're getting at this point in time? And when you talk about the trend will continue, are you looking at a 20% plus growth for the industry over the next couple of years? What do you think the sustainable growth could be?
No, I think what was anticipated, let's say till about a quarter back, was industry will grow at about 12 to 13%. And government push on housing probably might take it up by another 1% or 2%, I think, but that is on the entire industry, right? The push is going to be so high that this industry has to grow. We always talk about 12 to 13%. We used to talk about 14% earlier. Now it is 12 to 13%. But PNB Housing, this year, coming year, we will definitely grow at about 40 to 50% from the industry growth rate.
Okay. All right. Hi, good to see you, Mr. Kousgi, and thanks so much for coming down. Affordable housing, I think you had mentioned this point that you'll be one of the first housing finance companies that hit that 1,000 crores odd in terms of exposure out there. Have you hit that, or when do you hit that mark, and how do you see this segment ramp up?
Oh, I think great. In last 11 months, we have built a book of 1,000 crores.
1,000. Affordable housing.
Affordable housing. We started this about a year back. We opened 100 branches.
Okay.
In 11 months, we have built a book of 1,000 crores.
Okay.
And obviously, the portfolio is very new. I think 1 plus DPD is 0, right? I think it's a very good book. Now, having said that, there's huge scope, there's huge opportunity in this space. So we will be pretty aggressive in this space.
Okay. So aggressive would be what? Could you put some numbers to it? Where do you see this going? And in under a year, you've already hit 1,000 crores. How does the next 12, 18 months look?
See, affordable business, it's all about three things again. One, we need to open brick and mortar branches because not much of digital would work.
Got it.
Automation would work internally to try and streamline the process. From customer point of view, I think it is more of physical branches being present. And that is why we had opened 100 branches in last 1 year. We will open 60 more branches before March.
Okay.
Right?
Got it.
So one is we need to have physical branches. Number two, obviously we need to invest in people.
Right.
And number three, in this business, I think we need to manage the operational risk. I think that is the most critical part in affordable. As far as demand is concerned, demand is pretty good. It is, in fact, a notch better than prime.
Okay.
Mr. Kousgi, good morning. And thanks for coming in. Always great to chat face to face. Over the last 1 year or so, and we've done stories on this, etc., premium sales have been doing very well on housing, right? Affordable. Even if you take the number of units which are sold or the value of sales, etc. I mean, I'm not talking about PNB Housing, but industry. It's been Premium has far outpaced the growth there. But many do point out that is simply because the inventory of affordable housing out there is not that large. I mean, people don't seem to be building that much. Builders are not really interested in building affordable housing. Everybody wants to do premium because you got to sell. You can sell 100 premium units and you make a lot of money, whereas you got to build 1,000 to make the same amount of money. So it's tougher in that sense as well. I just want to get your thoughts on that. Do you have to push builders to come up with projects and say, well, we're ready to fund you, but you got to go into the affordable segment and do it?
I think this first sale from builders, that is a very small part in affordable. To a large extent, it is construction, self-construction, plot purchase and construction. These two would account to 40%. Resale would account to another 25%. Right? So when you move to prime, especially in, let's say, top 25 cities, I think bulk of the business would come in from developers, from apartments. Whereas on the affordable side, about 20-22% is from flats, and the rest is going to be independent houses, or it's going to be self-construction or plot purchase and construction.
But so you're making my point in a way, Mr. Kousgi, right? So flat apartments and builders making high rises, etc. And the affordable segment is about 20%. You said, right? First time.
I'm saying the composition of the book, if you see, it's about 22%.
Doesn't that need to grow? I mean, the real big scale and growth will come when that expands, right?
It has to grow, and it will grow. It takes time. And if you look at the ticket, it's obviously affordable. It also depends. Affordable business was there 5 decades back, 4 decades back, 3 decades back. It's only since last 10 to 12 years, we have categorized to 2 segments, prime and affordable. Even 3 decades back, you had those affordable profiles who were being given loan of 10 lakhs, 15 lakhs, 20 lakhs. Maybe the pricing was same. Today, we differentiate the segment, we differentiate the market, we differentiate the pricing, and therefore the yields are different, profitability is different.
I want to talk about the corporate portfolio. You said you'll be back in that segment. What are you looking at in terms of a timeline? When do you hope to get back to corporate portfolio?
See, we had taken a call to run down the book and also work on NPA.
Yes.
Both we have done. Now the book is less than 2,400 crores as of last quarter end.
Okay.
And very soon we'll be restarting corporate. But that will be in a very small way.
Okay.
We will be focused on select developers, select projects in select cities.
Okay.
And small ticket size. So it's not going to be a big story for us.
Okay.
Corporate restart is going to be only to propel retail business. To that extent, we are committed. And at any given point in time, at its peak, corporate at a portfolio level is going to be less than 10%.
Less than 10%. Okay,
Yeah.
got it. So retail loan growth is your main focus area. What is the sustainable retail loan growth? You spoke about overall AUM growth of 17 to 18% for FY24. But in retail loan growth, what are you looking at?
I talked about retail only.
Yeah.
Okay.
So I think for next 2 to 3 years' time, 17 to 18% is a good growth rate.
All right, Mr. Kousgi, I want to understand the cost of funds. If you could tell us how have they changed, and also what is your mix currently? How much of it is from banks? I asked this because the RBI had come out with an announcement, a couple of weeks or so ago. So does that increase your cost of funds? If yes, by how much?
Okay. Obviously, the rates start moving up till about 2 quarters back. Now it is more of a consolidation stage. And we are expecting rates to go down maybe after a few months. Maybe it will start with 25 bips and slowly it will catch up. Now, our cost of funds also had increased and now it started dropping.
Okay.
So on portfolio, our cost of funds is 8%. Incremental is about 7.9%. And looking at the performance, we are also expecting an upgrade from rating agency that could further bring down the cost. And till last year, we were not eligible for funding from NHB.
Yes.
This year, we are eligible, which means the cost is going to further come down. So I think going forward, there will be improvement in cost. And if you look at the entire liability mix, 40% is from banks, 31% is from deposits, 10% is we have NCDs, ECB is about 10%, and the rest is from CP and others.
So from NHB, you'll be, you're eligible to borrow. So obviously that will come at a lower cost. Can you tell us how much lower can that be in comparison? Currently, you're borrowing at around 7.9 to around 8%. So how much lower will that be? Point number 1. And what does this mean in terms of NIMs going ahead, margins going ahead?
So NHB blended both refinance and affordable, both put together. I think it should be, the difference should be little over 121-25 bips from the from the normal instruments, cost of funding perspective. In terms of NIM and spread, I think we've always maintained that our NIM, for example, last quarter was 3.95 and spread was 2.6. I think we'll be able to maintain around that level. NIM will be between 3.5 to, let's say, 3.9, 3.95. And spread will be around 2.5, 2.6.
I just have one question on asset quality. Do you see further improvement in asset quality by the end of FY24?
Oh, definitely, yes.
Okay, what would the level look like?
If you look at last March, our overall GNPA was 8.13%. And as of last quarter, which is about 6 quarters, it is 1.78.
Yes.
Right now, in next 2 quarters, it will come down, but it will take some time. So I think another 3 to 4 quarters time, we should be one of the best and comparable with the other companies in the industry.
Mr. Kousgi, CRISIL and ICRA had upgraded you, right?
They had changed the outlook.
Correct.
It was not an upgrade. They changed the outlook. The next is an upgrade.
Okay. And this NHB, you already started borrowing? Because last time you were on, you were saying...
we are in the process.
Okay. I mean, it's in the works. And you said the difference in cost of money from there is about 100, 125 basis
Generally, it's about 100 to 120 basis.
Okay.
All right. Mr. Kousgi, appreciate your time here. And thank you so much. We got a lot, not just about the industry, about your own company and the way forward as well. Looking forward to chat with you again sometime soon.
Thank you.
All right, that is the Managing Director and CEO of PNB Housing with more on the business momentum and the way forward. They're looking at a 17 to 18% growth in the business. That's something that they had guided for earlier as well. And they are very aggressive in this space, but they're looking at more brick and mortar branches. They're looking to open 60 more branches before the month of March.